Over the summer, my daughter got married, and her and her new husband are super anxious to buy a home. That's a good thing. But we've been talking through the different parts of buying a home, especially for a first-time home buyer. And I wanted to share with you today some of those conversations, specifically talking about down payment. Watch this all the way to the end. I have some pitfalls that you need to watch out for when it comes to down payment. With any first-time home buyer, or in fact any buyer in that matter, there are three key pillars to buying a home. Number one is your down payment, which we're going to talk about today. Number two is credit scores and where those are at. We'll do another video on that. And then the third one is the debt ratio. And the debt ratio is another way of saying, what is your gross income that you receive monthly, and how much or what percentage of that goes to pay your monthly expenses, including your new mortgage payment. I should say monthly debt expenses. Whenever I have a client that comes in and asks me about buying a home, there's two things that we review very first. Number one, what kind of monthly payment are you comfortable with? Many times I have clients who qualify for a lot more than what they are comfortable with. Last thing I want is a client moving into a home and feeling like that monthly payment is such a stretch that they feel house poor. We want to match the payment to their budget and make sure they feel comfortable. Number two, how long are they going to live in the home? This is a key piece in knowing what is the best loan strategy for their situation. Are they going to live there 5 years and then sell it and move? Are they going to live there as a forever home? Or are you going to convert it into a rental and then buy another property? Talking with potential home buyers, I share with them a few things, few pieces of advice. They do coincide with what Dave Ramsey believes on some points. Number one, I do believe that you should work to pay off your other debts and get those out of the way, especially credit cards, car payments. Those should be paid off and get taken out of the way. Number two is that I believe you should have a 3 to 6 month emergency fund set up and set aside. Once you have those, I think you need to talk to an experienced loan officer who's going to help you build that roadmap or that plan to home ownership. That loan officer can help you strategize and make sure that monthly payment's comfortable, that you're saving up the right amount for your down payment. Now, how much down payment should you put down? There's a lot of misinformation out there that you need to have 20% down. Totally not true. There are many loan programs that are just incredible at 0% down payment, the USDA loan to be one of those. Then there are great loans that have 3.5%, 5% down payment. These are great. In the instance of my daughter, I'll have her do a 5% down payment. I'll have her use some of the other money that she would have used as down payment to pay off her other debts and get that revolving debt out of the way. Now, there are acceptable sources of down payment. Obviously, a savings account, checking account at a bank is great. You have to show 2 months of bank statements to the underwriter. The next one would be a gift from a family member. And gifts are pretty cool. There are variations from loan program to loan program, but in general, you're going to have to sign a letter along with the giftor that says, this is a gift and there is no obligation to repay it. Another one that people don't think about often is if you have a 401k. And did you know you can take a loan out of your 401k to use as your down payment? Talk to your plan administrator and find out the terms, the conditions of being able to do one of those loans. But it's a great way to give yourself a loan for the down payment funds. Down payment assistance programs are also available. They will vary from city to city, community, state by state. I like some of them, other ones I don't really think they're that great. I tell my clients, I say, hey, if you can come in with at least 3.5% down payment, you're going to get a better rate and better terms on your loan than if you tried to do a down payment assistance loan. Typically, those will carry higher interest rates on the second part or the down payment part. Obviously, if you own another home and you have equity in there, you can do a home equity line, a fixed second mortgage on that to draw out the equity and use as a down payment on the next home. It's a great way to go. Right now, there's a lot of opportunity to get sellers to pay closing costs. Please note that a seller cannot pay your down payment, but I have clients who are using seller contributions to cover all the closing costs so that they can use their personal funds all as down payment. Great way to go. Now, if you have a vehicle that you're looking to sell, please be careful with that. Please make sure that you document everything. Keep a copy of the title, keep a copy of the bill of sale, and if the buyer is using of that vehicle is using cash to buy from you, make sure you note that. Let's say they buy your vehicle for $10,000, go straight to the bank and deposit exactly the $10,000. Don't withhold a couple of $100s of bills in your wallet. If they buy it for $10,000, deposit $10,000 and keep a copy of the deposit slip of the money going into your bank account. That way it becomes a sourced income and acceptable source of down payment. Let me give you a few tips on how to save up your down payment or speed up that process. First of all, you need to make it a priority, and you have to say, what am I willing to sacrifice to save up money to buy this home? And then I believe you need to know your numbers. Track your expenses, know your budget. If you don't track your expenses, man, money just seems to creep out and disappear. So here's a few things to think about. Number one, can you cut some of your subscriptions? Hulu, Netflix, Amazon Prime, Disney Plus, whatever it is, DoorDash. Are there subscriptions that you can cut to save some more money? Can you reduce the amount that you go out to eat and cook more food at home? That's a great way to save money. Are you driving an expensive car, a Tesla or something like that, that maybe you get rid of and sell and use a hand-me-down car or something that's more affordable that allows you to save more money? Do you have an extra room in your apartment that you could rent out? Is there an opportunity to work some overtime, bonuses, or even work a second job? This last tip I really like, and that is to automate your savings. And the way you do that is most payroll companies, when you get your paycheck, they will allow you to split your paycheck to go to like your primary spending account with one bank, and then set up an account with another bank where a couple $100, $500, or whatever it is, with every paycheck gets moved into that account. You just don't touch that account. You make it hard to access it, and you let the savings build up in there by automating that savings. Now, a word of caution or a few tips on pitfalls to watch out for. So we haven't talked about cash, and when I talk about cash, I mean the bills, the stuff that you would hide under your mattress, or the stuff you keep in your safe. This is very hard for an underwriter to document where the source is, so you need to get that in your bank account and have it in there for 2 months at least, so it is seasoned and good funds to be able to use for down payment. Cash is just super hard because they want paper trail everything. The next one is crypto. If you're using cryptocurrency as down payment, that's fine. Just you're going to need to liquidate it, sell it, and then transfer the funds into some type of brokerage account or bank account where the underwriter can document and see those as good funds. Now, a couple of other things to be aware of. Student loans are a big deal right now. There's a lot of talk in the news about them. Please be aware that in the majority of all loan programs, if you have student loans, even if they are in forbearance, you're still in school, they're in deferment, you're going to be hit with a monthly payment even if you're not paying on them right now, because you will in the future. And so that's going to affect that third pillar, your debt ratio. So just be careful on the student loans when you're taking those out and amassing those. They're going to definitely affect your ability to get a home loan. The next one is my self-employed friends. You probably know you need to be in business for 2 years and have your tax returns done. Many times I get clients who will fill out their tax returns and say, Miles, I make $100,000 a year. That's awesome. What they're really saying is they have $100,000 a year of revenue, but when I look at their taxes, they have so many write-offs, they're showing $17,000 of income. That's really hard to qualify for a mortgage when you're only showing that much income. So be careful of how much you write off on your taxes, and understand that the lender's going to average those 2 years together in getting you qualified for the loan. Let's take a minute and check out what's happening with our interest rates. Rates have not been moving in the right direction. In fact, over the past couple of weeks, we've had rates getting worse and worse. You can see on this chart, it is an inverse chart. As the chart moves down, rates are getting worse. And you can see definitely where the trend is going. We look at two things. We have a technical analysis where this chart comes in, and then we also watch and see what's happening in the news. So in the news, the Federal Reserve has leaked out to the media that they're planning on doing a 75 basis points hike in the federal funds rate in September's meeting, which is coming up in a couple of weeks. Then also today on September 8th, the European Central Bank, they got aggressive and unexpectedly raised 75 basis points. The Federal Reserve is talking tough about getting inflation under control. It's obvious that they are behind the curve on this. And so the markets are really balancing here between them being aggressive and getting inflation under control, but not being too over aggressive, and also showing that they don't have control of the situation. Again, inflation's the enemy of our mortgage rates. As inflation continues to be higher, it's going to hurt our rates. So we're looking at our chart here. You can see that line at 98.641. That's a support line, not a super strong support. We kind of bounced off that. Hopefully we can see a reversal off of that and we move up there. That will improve some of our rates, but we're being very cautious. The little orange triangles that you see are the spots where we lock in our clients on there. My name's Miles Pitcher. I'm the owner of Superior Lending, and I'm happy to help you with any questions, mortgage scenarios that you may have. Have a great week.